Hello, I'm Tony, and welcome to the Tony Shap Show. Hello, everybody. Welcome back. This week I have Bruce with us. I'm super pumped and excited for him to speak with us today. I can't wait for him to share with us who he is, what he's all about, and that way we could be right on the same page. So with that said, Bruce, I wanted to give you a big, warm welcome to the Tony Shap Show.
Glad to be here, Tony.
Awesome. Let's just kick it right off with the one word open, Bruce. So what is that one word open you could share with the audience right now that could describe how you're feeling in this moment?
I would say optimistically relieved, even though that's two words and you only gave me one. And I say that because here we are, I hope, at the looking at COVID in the rearview mirror rather than having to deal with it directly. And to be here sitting to you talking about our business and opportunity 9 months ago, I'm not sure that, I didn't know what was going to happen. None of us knew what was going to happen. And, where we are today and how things look down the road, cautiously optimistic.
I love it. Let's talk about business. So if you could share
Sure.
with us, your why, how you got started, and where you are today, what you're up to now, and what you're looking in the future. So I know that's like it could be a 3-hour answer, but if you could just give us a high level in like
Sure.
2-3 minutes with those 3 timelines, that would be great, Bruce.
Okay, this was going great until that 3-minute thing. So StoneCreek Capital is a private equity group that my partner and I have been together for over 25 years, so well established. I originally started with one of the top buyout firms in the country named Kelso, and we were the West Coast office. And in '92, myself and 2 of the senior partners at that firm went off on our own and formed our firm. In '95, we raised a $60 million fund. And then in the kind of late '90s, early 2000, the 2 senior partners retired. Myself and my partner to this day, Drew Adams, took over. And one of the frustrating things to us about having a fund was that there were really strict guidelines as to what we could and couldn't invest in. So once we got through managing the portfolio from that fund, takes us to the mid 2000s, we wanted to remain partners, and we decided let's start doing deals on a standalone basis versus raising a fund. And we actually thought at the time, we can get some deals under our belt on a standalone basis, maybe we could raise another fund. And something very unexpected happened. We fell in love with that model for approaching private equity. And at the time, we didn't realize it, but we were one of the groups that helped pioneer what's now become a very popular option in private equity, which is the independent sponsor model. And all that means is that rather than having committed capital, we raise capital on a deal by deal basis. And we have a network of parties that have a desire to invest in our fund, but they're not obligated to invest. And on the one hand, and way back when, I smile about this, they didn't know what to make of guys like us, so they called us fundless sponsors. Can you imagine a worse name, Tony? Okay, it's like, let me tell everybody we don't have any money myself. I don't need my label to telegraph that before I have opened up my mouth. And over time, as I was saying, we were one of the pioneers. I became one of the most visible speakers, if you will, on the merits of the model, the relevancy of the model, and was on a crusade whenever I would speak to say, stop calling us fundless sponsors. We hate that name. Please start calling us independent sponsors. And a couple others did that too. And before you knew it, what we were telling everybody to do, they adopted. So back to our model. What we have been able to build, and I would really call it our brand, is taking this flexibility to create um, make us a compelling option to groups that have committed capital. So in other words, rather than, we're taking what most people would say is irrelevant. If you don't have the money, how can you get it done? To making it especially relevant because of that flexibility. So where this could be one of the areas we're proudest of, and it's really been a key to our success, is we are the ideal partner for a C-level executive or a team that has an opportunity to buy or has identified a business they want to buy before the owner has hired a sell-side executive to sell the company. So this would be pre-auction, pre-sale, but that executive or that team tees up the opportunity. And one of the things we realized was if they actually are taken seriously, they're going to be careful what you wish for mode. They've never bought a company before. They don't have the money to buy a company. How in the world are they ever going to get that done? And we realized that we are the perfect partners for that situation because we've got what they need, which is access to capital and experience doing deals. And they've got what we need, which is backability and access to a proprietary investment opportunity, which are the type of investment that we're trying to bring to our network. It's not going through an auction. It's something we were able to lock up. And the reason that partnership works so well is that we're not teaming up as their boss. If they were to go hunting for equity and call on private equity firms, every group they're talking to, if they're lucky to find that partner, is still their boss because they control the company. But contrast this approach, where not only can we give them credibility with the owner to take them seriously in a situation where the owner would probably be dismissive, but we're going to our network with exclusivity and negotiated terms. And it's a beauty contest. And that gives us the opportunity to both empower the team, because we're saying this is a team, this is a strategy, here are the terms of the deal, here's the value creation strategy. Do you like it or not? It's not like those investors are telling them what to do. We're presenting an opportunity where we're saying this is what we're going to do. And that puts them on a much more even playing field as they move forward. Second, if we've got more than one group that wants to back us, we can get them the best fit. And then lastly, we're in a position, if more than one group wants to back us, to get better terms for all of us. And so it's a private equity approach to a little different prism, but the people we go to are private equity groups with committed capital. And the reason that there's a receptivity to this is there's far too much money out there and not enough good opportunities, and private equity groups don't like auctions. So to the extent we can bring them something that fits their criteria, it's a win-win for them. And just one other piece on this, most people don't know this, but private equity groups with funds don't really have a fund. They have a 5-year commitment on the part of their investors to send money when the general partner makes a capital call. So the clock is ticking on how long they have access to that capital. And if there is too much money for too few deals, they're very eager to deploy capital in situations that fit their criteria so that they don't find themselves 5 years later, they got a $500 million fund, they still got $100 million to put to work. So anyway, that's kind of long-winded, but hopefully understandable and helps distinguish an independent sponsor, and StoneCreek in particular, from a traditional private equity group.
That was awesome. Thanks for the clarity and making a distinction, because now we have a better understanding of what you guys do. Because I mean, I've seen, you could definitely say you're very unique. So, which is really cool. I love that. Now, moving forward to wins, if you could share with us, Bruce, a recent win that you had that it's near and dear to your heart, so to speak, in business context. And also, when you're describing that win, can you share with us what you learned from that experience, that view?
Sure, sure. Can I give you a totally depressing situation? Then it became a winning situation. So I can tackle worst and best in the same story.
Perfect.
Okay. So one of the challenges that any group like us has is how do we, I take a step back. The scenario I mentioned before that fits us so well is partnering with a team that otherwise might not be taken seriously because of what we bring to the table. And just one other point on that, so many executives would like to be owner operators, but they've never pursued it because who's going to take them seriously if they don't have the money and they haven't done it? And so one of the elements of this as well is getting the word out to entrepreneurial executives that if that is something that you've had a passion for, you think you're backable, then perhaps that would be something for us to talk about. So that's one end. However, the traditional path for so many private equity groups is to go through an auction where the owner has hired a sell-side advisor, an investment banker, to sell the business. And then there are numerous people looking at the business. So we occasionally participate in those opportunities. And this was a situation where we nailed it in terms of being taken seriously, the owner really liking us, and having enough credibility that we made it past many groups that didn't have, that had committed capital. But unfortunately, in this situation, it was us against a strategic buyer, meaning not a private equity group, but a strategic buyer. And they decided to go with that group because they all put a much higher price on the table. You know, we went crying in a corner, and within, it took about 3 months, but then we got a call saying, hey, you know, we told you that you were the other party and we're chose the other group. Well, those guys couldn't get the deal done. And so we would like to sit down with you exclusively and take a look at this. Now, we really should have played harder to get, but we were so happy that we go, sure, yeah, great, let's talk. And we're in the process right now of discussing the LOI. But the first thing I did say to the investment banker when he called me was, you know, that other group, they were no StoneCreek. And with a big smile, because this is one of the challenges that we have is being taken seriously. And in this particular case, they came back to us. What did we learn? I think one, never, the deal's not done until the deal is done. Second, conduct yourself through any of these processes in both a confident and professional and sensitive manner. The word sensitivity is a very important one. If you think about it, when we do prevail and get somebody to say, you know what, I feel safe with you and I want to partner with you, that's because we've gotten them to believe in us. And that is what enabled that opportunity to come back to us.
That was remarkable because I was just so into that story. So I really appreciate you sharing that with me. I felt like I was experiencing it, like the whole thing. So that was awesome, Bruce. There isn't too many times I could say that, but that was really awesome. Thanks for going through that with us. So I know the listeners will have a lot of great takeaways as well. So with that said, let's change gears a little bit. So if you could go back and tell your, the 21-year-old Bruce, hey Bruce, there's one thing you should do and don't forget, this is your future self telling you, what would you tell your 21-year-old self?
Um, I remember my 21-year-old self being naive and yet serve myself. And when I went from undergrad University of Washington to Wharton, but didn't work in between. And so I was among the youngest students, in the MBA program there. And one of the things that kept happening to me was, even though I was at one of the best schools in the country, when it came to interview, I got rejection after rejection after rejection after rejection. Must have had 20 interviews and not a one of them wanted to talk to me again. And so I thought maybe I'm doing something wrong. And so I went to the placement counselor and we sat down and he said, boy, I don't get it. I think you handle yourself well. And he goes, I've got an interview with one. Do you have any interviews coming up? I said, yeah, this afternoon. He goes, I know that party. Why don't you have that interview and then I'll find out how you did. I'm not going to help you, but I'll at least give you some feedback. And the next day he saw me in the hall and he goes, we have to schedule a meeting immediately. And I was 21. So I go in there and he goes, okay. He goes, is it okay to use profanity on this podcast? Okay, I won't use profanity. But he goes, what happened to you? Who were you in that interview? He goes, first of all, you went in trying to act like you knew everything when it was obvious you didn't know squat. And he goes, second, you tried to sound like an authority on everything. And he goes, the only time you're even slightly endearing is when you ask them a question. He goes, you came across like an undergraduate among graduate students. There's no way we're going to be, talking to this guy further. And of course, I was crestfallen, just like I was when they rejected us on that deal. In any event, he said, I don't get, he goes, so here was the advice I got. And it was remarkable and it was invaluable. And that was, he videotaped me. And before we videotaped, he said, first of all, take a breath. You don't have to be that anxious. It's really important to be yourself. Just because you're younger and you haven't worked before, your insecurity about that comes through loud and clear. And he goes, and look at where you are. How many people could get as far as you did getting into Wharton right out of undergrad? He goes, hardly anybody. He goes, take pride in what you've done and don't feel like you need to overcompensate for what you haven't. And then my next 3 interviews, I got second interviews on every single one of them. In fact, he said, play a little harder to get. So a couple of key things from this. Don't be afraid to be yourself. And don't try too hard to be somebody else.
That's beautiful. Thank you so much. I have another trick question for you. So as a leader, I know you have a 30,000 foot overview when you're looking at a business and you see common issues. So like, for instance, just to give you an example, like if you have a Tesla and your range is 300 and you go, why am I not getting a good range? I'm getting half the range with the full tank. It's because you're putting your foot down all the way, right? So you're not getting, right? So that's like, that's the number one reason why you don't get range out of your Tesla, generally speaking. Now with you, from your 30,000 foot overview and your experience for all these years, when you're looking down, you see these conversations you're about to have, or businesses that you're about to work with and stuff like that. What is that one thing that you see, Bruce, that you go, oh, that's why this is not working? This is why everything is falling apart, because of this one thing. If you could tell us as a general observation from your experience, nothing specific, but just something that you've noticed, like this is what a leader should not do so this doesn't happen. Or
all right, well, you're right about that being a question of depth and tricky and so forth. I think that Gosh, that's a tough one. I guess one of the things I would say is many times that I see businesses that are just enamored with what they do, but they don't really understand the need of the party that they're trying to sell to. So in other words, this happens in technology companies where you'll see startups raising millions of dollars, and that money will be earmarked to develop and commercialize the technology. And now you've gotten a couple of rounds, but you didn't set aside any money or focus on the marketing or the need that's being filled. So in other words, it's say, look how impressive this technology is, but you failed to focus on, you focused more on what it could do rather than the need that the technology can satisfy. And I learned that lesson early in my career, because prior to going into private equity, I was with Bank Boston and I was in their high-tech lending group. And it amazed me, and I didn't have an engineering background, which is why I couldn't follow that whole Tesla example that you put up there.
Sorry about that.
Yeah. I mean, that was not a fair one. Use something simpler next time. But I didn't know what a semiconductor was or an integrated circuit or any of these things. But that didn't intimidate me, because I took the position as a lender that if I don't understand the need that this company's product is designed to satisfy, and they can't make it understandable to somebody who doesn't have an engineering degree, I'm not going to lend. Because they've got to make, the way they win is satisfying a need that nobody else can. Not building a better mousetrap. It's got all kinds of bells and whistles. But when you say, well, okay, well, how's that going to help me? They don't have a good answer.
Beautiful. That was, thank you for taking on that challenge with that question. So, and here's one more question for you. This
Okay, make it simple, Tony. Simple.
Okay. What's that one question I should ask you, Bruce, that I have not asked you yet, if any?
I guess the question is, how are you able to have credibility with owners when they know you have to go and raise the money? I mean, it's the epitome of a challenging sale. If you can imagine, we're talking about millions of dollars. And how do you do that? How in the world can, especially there are thousands of groups out there, private equity groups, with tens or hundreds of millions of dollars. And you come walking in and you go, don't worry about it. We'll find the money. And the answer is, it starts with gaining their trust. Talked about this earlier. And giving them a sense that you can deliver both the personal and financial goals that they're seeking to follow. And then that is followed up by, in all of our career, my partner and I have never failed, once we take a letter of intent to market, to get the capital backing we need to get the deal done. It doesn't mean that every deal gets done, because all kinds of things can happen to stand in the way of getting a deal done. But those are things like, in due diligence, you found something you didn't know about. One of the most common is seller's remorse. They just decide they don't want to sell. But we're very proud of our record of understanding what we can get done and getting it done. So I'd say, it's how can you be successful when others have committed capital and you guys don't? And it's both a combination of connecting back to the sensitivity, coupled with a track record that gives us the credibility, to feel safe.
Outstanding. Bruce, that was outstanding. Thank you. So sadly, as we're coming to a close, share with us how our audience could find out more information about your firm, and if they have any questions, how they could reach out to you.
Sure. Go to our website, which temporarily is you're going to just see one page. It says, under construction, but the contact information for me is on the website, www.StoneCreekCapital.com. And my phone number is 949-929-6656. And my email is bruce@StoneCreekCapital.com. So I am a very accessible person. So if any of this makes you curious about learning more, feel free to contact me, and I will be very responsive.
Appreciate you putting that out there for our listeners. And I'll put that in the show notes for sure, in case they're driving or working out, they don't have a pen handy. With that said, if you could sign us off with a one-word close, Bruce, what would that be, and why?
So I'm going to use the word empowering. And I use that word because the essence of what the best of what we can be is helping an entrepreneurial executive or a team that has a passion and desire to buy a company of their own, but they don't know anybody in private equity. They've never done it before. So they've just never pursued it. And if that team and leader are backable, and I can go into more detail if somebody wants to follow up with me on that, then we can get that deal done with you as your partner. And I can't tell you how many executives I've spoken to over the years that haven't ever realized there was a path to doing a private equity deal, so they never pursued it. And what we have to offer is a path that can take you there.
Excellent. Well, Bruce, thank you so much. I'm super grateful for your time, and thanks for the awesome interview. I can't wait to get it out there and distribute it to everyone so they can find out more. And I'm looking forward to having you back on here sometime soon. I'm going to give you an open invitation. So whenever another big W comes across or something you want to share, I'll reach back out to you, or you can reach out to me. I'd love to have you back on.
On one condition: none of these trick, thoughtful questions. Okay, I'm willing to put up with that on this first interview, but not in the future. Thank you.
Okay.
Really enjoyed it.
It's a promise.
Okay, bye-bye.
I'll be easy. Bye.
Bye-bye.
And there you go. I hope you enjoyed it, and great to have you, and thanks for listening. And don't forget to subscribe and stay tuned for the next episode. Till next time, onwards and upwards.